Good morning and welcome to the XM.com weekly market update. With me again is Peter McGuire, the CEO of XM. Hi, Pete.
Good morning, Andrew.
India.
Yeah, what a great subject matter.
Plenty of activity. First of all, GDP came out last week, so another strong number, 7.8%, which they were expecting 6.7%, and the three preceding quarters before that were all 8% plus. So solid numbers.
You can't argue against, the explosive growth that we're seeing in India, and that's been very evident over this decade and certainly the last couple, and the decades to come. It's going to be breathtaking, from infrastructure, and you've had an election this week, and Mr. Modi, I feel as though his wheels are falling off to some extent, and what happened yesterday as far as the markets. So the overall mood is strong across the whole nation, and infrastructure is just exploding with, I was there in February, and they're building the German rail system. So the size of the German rail system is being built in India each year. That's the as far as train travel. You've got a lot of people to move around there.
That's right, and a long time overdue though.
Yeah, without question. Yeah.
And going on the back of that elections, which came out overnight, so Modi didn't get as many seats as what the market anticipated.
Or he anticipated.
Exactly. Now, the share market was off just under 6%, which is one of the biggest drops for quite some time. The rupee is at its weakest point for a long time as well. So he's going to get back in with a coalition, obviously.
Yes.
But there seems to be...
Argy-bargy.
Yeah, not so much a changing of the guard just yet, because he's obviously just been re-elected.
That's right.
There's definitely a mood for change.
Mood for change from Modi. The market was very strong on Monday. We were up 3%, 3.2%, I think, for the Sensex. And, to see that give up all of those gains yesterday and wipe out another couple of percent, it just shows you the volatility across those equity markets.
And I think they just underestimated the opposition there as well.
You can't underestimate anyone.
No. Eurozone, we probably will get an interest rate cut this week.
Yeah, tomorrow, Thursday, Bank of Canada today, and non-farm payrolls Friday. So yes, I wouldn't be surprised, and successive. I think that over a window of, the summer, I wouldn't be surprised to see the old 1-2.
Yeah, well, sort of interesting. We were chatting off air. CPI has gone up slightly.
Yes.
Unemployment is low.
Yeah.
GDP is now back positive. So they are all good signs. And yet we are going to get an interest rate cut, which is normally the complete opposite.
That's right.
It works.
Yeah, I do agree with that, but I think there is some pain out there. Some of those smaller nations are really doing it quite tough. So hope they have a good summer, and naturally from a tourism perspective.
Yeah, so we're expecting 0.25% rate cut this week.
Yep.
We'll see how that comes out. Euro travelling around that 108 mark. Obviously, that interest rate cut is probably already...
It's baked in to some extent.
For sure.
But, plenty of analysts are saying you could see a pop and take it above 109. I'm just interested to see how that trades, and you've got to be careful trading a market like this. Don't go to sleep and just say, I'll sleep through that from a fundamental and have, your stop losses in, and you could get slippage. They could just wipe you out. And as you know, markets gap, and they gap quickly. So you've just got to be on the ball when you've got big announcements like this. So for all the traders, keep your hands on the wheel and look at the screens.
And very much pay attention to the commentary.
You bet. Well, we're global, and, if you're in that Africa time zone all the way through that corridor to Middle East and, of course, to Asia, to Euro, really keep an eye on it, because, you've got Canada today, which, again, that could pop to the upside as far as a rate cut. And then you're looking at Euro, and then you've got non-farm payroll, as I said on Friday. Yeah. It could be a volatile end of week for currencies.
Yeah, for sure. Just finally, the VIX at its lowest point in 4 years, which when you sort of think about it, at the moment, the markets are fairly stable generally. There's nothing to...
Well, certainly equity markets are. You're not seeing massive swings, and you've had a really nice move to the upside because the VIX is on volatility of the option market, and you're looking at it around about 5,200, 5,300 for the S&P 500, and that's what it's gauged off. So, it's a great sign to go into a summer with that sort of vol, and it's just creeping up. And I feel as though everyone's saying, Andrew, will we see a continuation of a summer rally that could materialise?
Yeah, and I think also, particularly in the equity markets, earnings season is now over.
Yeah.
And once again, all in all, it was reasonably good.
Yeah, good consumption. And again, summer period, so you might see, more people out there spending more, which in turn helps the economy and helps these companies.
Yeah, sure. All right, we'll keep an eye on things. 2 lots of interest rate cuts, most likely.
Yes.
And some pretty solid data coming out of the US later in the week.
Yeah, and keep an eye also on gold because and crude oil. We'll just cover that. We had the OPEC meeting on Sunday. Then we're not seeing any movement over the next couple of months, but then we're going to see production increases and from the autumn moving. That's Northern Hemisphere autumn. And so there's the first part of it. And crude's really given up some dollars in the last, I'd say, 3 to 4 sessions, been spent down.
Yep.
And it's approaching that low 70s as far as WTI, mid 70s to 76, 77 for Brent. And then gold, it's back at 23.40. So there could be some movement there as well later in the week, depending upon what happens with US dollar.
All right, we'll keep an eye on all of those and we can chat about them next week.
Look forward to it.
Right, thanks, Pete.
Cheers, Andrew.
And that's the XM.com weekly market update.